Rick Santelli is standing by at the CME in Chicago, and he has the number of the day and week. Sir.
Yes, these are definitely the numbers of the day and week, and they're populating slowly. Let's go in reverse order. Oh, they're on the wires now. Personal income, more than double expectations, a powerfully strong, up 0.9%, almost up 1 full percent. And this is the highest read going back to January of last year. So a one-year high on the income side. On the spending side, a completely different story. They're expecting a number up a couple of tenths. Well, it's down a couple of tenths, down 0.2. That's the weakest spending number going back to, and I'm going to have to go back to February of 21. February of 21, we had the minus 0.1. That was March of 23. So these numbers have been mostly small to the upside. This is a big drop. Now, if we look at real spending adjusted for inflation, it gets worse. Down 0.5%. That'd be the weakest level also since Feb of 21. Now the meat on the bone here. PCE index, the headline number month over month, up 0.3 as expected. And do keep in mind, even though it was as expected, to find a higher number, you're going all the way back to January of 24, which was up 0.4. Now, if we look at the PCE year over year, it's up 2.5. It's up 2.5 as expected, 0.1 cooler in the rearview mirror. 2.5 would be the smallest number since it was 2.4 in November. Do remember last month's 2.6, which still stands unrevised, was the highest since April of 24. Now let's go back to month over month and switch categories to the core numbers. Core PCE month over month, up 0.3 as expected, 0.1 hotter in the rearview mirror. To find a hotter number, you're going back to, depending on how you round, 0.34 in March of last year, or 0.5, which was January of last year. And finally, maybe the most important number of all, 2.6 on the year-over-year core PCE. That's as expected, and the rear-view mirror was updated from 2.8 to 2.9, which would make last month's 2.9 the highest since March of 24. It reverses to 2.6. 2.6, well, to find a smaller number, you're going all the way back to March of 21 when it was 2.2. So we can argue here that the numbers are basically a bit better than expected or as expected on inflation. The spending numbers, both real and unadjusted for inflation, are a bit scary here. Now, real quickly, let's take some other things out of the way here. On the trade balance, the January final read, well, it goes to minus 153 billion. This is just downright incredibly large. The biggest pre-COVID deficit we had was minus 78 billion. The data goes all the way back to 1989. There's nothing higher than minus 153. Last month's minus 122 was also an all-time high. So these trade balances, the amount of money that's in this country is really large, and we could debate whether it's a good thing or a bad thing. We know the president doesn't like it. Retail inventories drop again. This is another oddity here. Down 0.1. Last month was down 0.3. It's now down 0.5. You have to go way back to find back-to-back negative numbers on this. You're going back to 2021. Now, if we look at the wholesale inventories, an exactly opposite picture, up 0.7. That's a powerful number. To find a higher number, you're going back to August of 22. So retail's going down, wholesale's going up. Interest rates right now are moving higher on these data points. If you look at what the low yield has been intraday on all of these moves in tens, it's basically about 421, 422. Right now we're hovering at 427. Last week we settled at 443 to show you how much we have dropped. Andrew and the gang, back to you. And just one notion here. Everybody in the last couple of 3 days have been talking about how we always know what these numbers are. We could calculate them. There's some surprises here. And, there's surprises on a lot of numbers. So the notion of, we can get pretty close on expectations might be overplayed. Back to you.